Best Buy have just released earnings, and as you can see, they beat EPS by 0.95%, and they also beat top line by just over 2%. So Best Buy is trading up 1.77% throughout the day, and this is on the day where Snapchat, with no earnings, released lower guidance for the following quarter, and that has pretty much tanked the market. So Best Buy being up is, a good thing. Very, very little, many stocks being up today. But the question in today's video is Best Buy a buy now based on their earnings results, their fundamentals, their intrinsic value? And we're going to go into that in this video today. So all I ask for is that you smash that like button. Don't forget to subscribe. And if there is a company that you want me to do a intrinsic fundamental analysis on, comment down below and I should look into that. So the first thing I look at is when you analyze a stock or whether or not it should be a buy today, is looking at the fundamentals. And I like to use Everything Money's 8 Pillars Screener. Again, it does cost money, a subscription, a very, very good subscription. I'll link their YouTube channel down below so you can understand more about them as a company. But as you can see, they use these 8 pillars, and I'm not going to go into them, but effectively what you're looking for is, an eight pillar stock. So it's got check marks across the main things. The main things that I like to look for, if I had to hone in on a few, and I'm planning on doing a video around this, is you want to see revenue growth, you want to see it, you want to see profitability, you want to see them reducing their shares outstanding, so therefore you're getting more ownership of a company just by holding the stock. You want their cash flow to be up, and what I also like to see is that their return on capital also very high. They like it above 9%, and it's way above at just under 30%. So from a fundamental standpoint, I quite like Best Buy is there. And also one other good thing about Best Buy is that they also pay a dividend of just under 4%, which is a pretty good dividend to be paying. So you might want to do some more analysis on if dividend is important to you. Has that been going up? Have they been increasing their dividend as time goes on? All that kind of good stuff. But at a very, very basic fundamental layer, the numbers or the ratios are checking out inside our favor. So let's say you've done all that analysis, you're quite happy with Best Buy, where they're going in the future, their fundamentals, their dividend ratio, all these kind of different things. The best bit then comes on to is what price do we pay for Best Buy? Now, for those of you who watched my videos before, know that when I go look at a stock, especially a well-established stock, I like to buy stock of the underlying that is below their intrinsic value. And the intrinsic value in this example is this kind of orange line here, which is trying to calculate what is the worth or the stock, not the stock value, the company value of all its assets. What is the value of that? So if they sold everything, what would be the price per share for this particular company? And as you can see here, that from all stocks goes up over time, and the stock price, due to fundamental macro environment factors, is sometimes a stock is above intrinsic value and is sometimes below intrinsic value. And what we're trying to do is understand what that intrinsic value is and where it is compared to the current price today. Now, there are many different valuation models that you can use. The one that we'll be using is an earnings valuation model. I'm not going to go into the ins and outs of the calculation and various other things, but the good news is that I have created a free TradingView indicator that calculates this based on the assumptions and inputs that you enter on 3 different kind of scenarios. And this is what it kind of looks like, and we'll go into these numbers inside a second and how we complete the inputs. But again, it's absolutely free. If you don't have TradingView or you want this indicator, first link inside the description to check that out. And once you've got TradingView loaded, what you want to do is in the search bar, under indicators is type in OGT, and you'll see it's over here, the OGT Intrinsic Value Calculator, as well as all my other TradingView indicators that I have created, and there are videos on all of these indicators in much more detail. So when you look at the inputs of the indicator, the first thing we need to understand is what is their EPS or their earnings per share today, and what is their annual growth rate going to be for the next 5 years. And what you'll see here on the screen is TradingView has this data. So it has the TTM, or trading 12-month EPS of $9.84 per share already calculated. So what we need to then understand is, what are the annual growth rates going to be? And there are three assumptions: a low assumption, a medium assumption, and a high assumption. So what I like to do is I like to use analyst estimates as my highest assumption and then work backwards from there. And for Best Buy, the analyst assumption is 8.4% annual growth. And the way you find that is, if you head over to Yahoo Finance, type in your ticker symbol, and head over to the analysis section and scroll down to the bottom, you will have growth estimates. And you'll have this line here that says next 5 years per annum. And you can see for Best Buy is 8.4%. Now, the reason why I like to use the analyst estimates as the high estimates is because I don't trust them, if I'm really honest with you. So I'll rather assume that that's best case scenario, and then I've worked backwards. Again, these are just my assumptions. I've played around with the numbers to see where the lines go in. I've basically done a 50% drop from there and another 50% drop from there, so I can see what some extremes are. The next thing is, we'll go on to annual return in a second, is the PE ratio, so the price to earnings ratio in year 5. So what we need to do is we need to work out what that year 5 multiple is going to be of the earnings to calculate the share price in year 5. So one thing I like to do is head over to Y charts, and if you type in a ticker symbol, again, I don't have an account, but the good thing is what it does show you, if you scroll down, and you can see it even with this watermark on top of it, is you can see PE ratio range past 5 years. Gives you the minimum, maximum, average, and median, right? So it shows you kind of a ballpark figure with these 4 numbers. You can make a generalist assumption over there. So if we take, for example, in the last 5 years, Best Buy has grown 24.3%. And you can see the PE in the last 4 years has been around, between 15 and 14, right? Around the medium and the average. So if we know that they're going to grow less than 24% to 8.4%, I've then taken an assumption by using 10 as the figure. What you can do as well is look at, if you scroll down, you've got PE benchmark of other retailers or inside that sector. Again, some of these are very different and are not really the same. Like Nordstrom is they sell different stuff to what Amazon sell. They're mainly an online business, where Best Buy is an online and a bricks and mortar store. So you can use some of this, like if you're doing Visa and MasterCard as an example, it's probably a good comparison. But again, only look at this stuff really if you can do like for like competitors as part of that. So again, I've gone with 10. Again, this is just my view on what it is. And then we got your annual return. So what this table is looking at, so if we take the 8.4%, it's annualizing the trading 12 months and adds 8.4% every year to year 5. It then multiplies it by your multiple of 10, so therefore the share price in year 5 intrinsic value is $135.90. Then what we do is, once we then type in an annual return, because at the end of the day we want to make appreciation on the stock. And I normally go with 12.5%. And the reason why I go with 12.5% is because I can make 8 to 10% just trading or investing into the S&P 500. So if I'm going to take additional risk going into individual stocks, I want a higher rate of return. Also, going with the higher rate of return also gives you some margin of safety and some cushion if your assumptions are slightly off or your PE is slightly off. right? So that's why I like to stick with 12.5%. And what it does, it discounts back all the way back to year one by 12.5% to show that if you wanted to make 12.5% a year, this is what your intrinsic value would be. So then when you hit OK, you basically get 3 lines, and this is a 5-year analysis. And you've got a table view of this, and you've got the 3 lines over here. And you've got your high assumption, medium assumption, and low assumption. So when we look at this, is as you can see, if you believe analyst estimates at a 12.5% rate of return at a 10 PE ratio, we are significantly undervalued for Best Buy because it's rating Best Buy at intrinsic value is $84.84 and the current share price is $73.26. The medium assumption is just below the medium assumption or just above the medium assumption. Last week it was below, and with the low assumption on $66. So if you think about it, that we put 2% EPS growth over the next 5 years. And at 12.5%, today's price is 66. It's not that far away, even with a 2% growth. So I like where Best Buy is. It gives a dividend of 4%. If you are dollar cost averaging in, putting in, $50 a month, $100 a month, whatever it may be, into something like Best Buy, it is an 8-pillar stock. Now's probably the time to start, cost averaging into a position. And if it does tail off even more, at least then you're averaging down. But if you've got a lump sum of a few thousand you want to invest in it, I wouldn't do all of the money in one go. If you are an options trader like me, I will start looking at, puts at the $65 mark, and start picking up some premium while I'm waiting for Best Buy to potentially get to that price. For me personally, I think I can make a better return in other stocks. So I'm not actively participating inside Best Buy from an options trading point of view. However, in one of my value investing portfolios, I'm definitely going to start, apportioning of that capital into purchasing Best Buy because I do like where it's sitting at the moment with, this 2 to 4%, around the 3% kind of earnings growth at a 12.5% return at a 10 PE. So I do like it. I would do some more analysis on the stock, where you think it's going, what initiatives they're looking at, but looking at it high level, they are inside a very good place, I think, and definitely something to consider as part of a larger portfolio. So download TradingView. Again, absolutely free, this indicator. Like, subscribe, and comment down below your thoughts. And I shall see you guys in the next video.